Hey guys, getting a lot of questions right now from clients as to what's going on in Washington, D.C. with the proposed tax legislation. Keep in mind, all of this is proposed, and what actually happens will likely be way different than what is being proposed today. But there's some highlights here that I thought would be relevant for our clients' situation that I thought I would just share quickly. I'm sure I'm going to miss some of this because I'm trying to get this in just some bullet point fashion. But there's a couple things with income taxes first and foremost. So what's being proposed right now is that the top marginal rate today federally is 37%. If you're married filing jointly and earn approximately over $628,000, you'll be at that 37% tax bracket. What's being proposed is that number is going to come down to $450,000 if you file a joint tax return, and the marginal rate increases to 39.8%. Okay. Secondarily, capital gains taxes. So right now, capital gains tax under a certain income could be 0 to 15%. And then at a higher level of income, I think it's 508, you move up to a 20% tax rate. That number is coming down to $400,000 for a single filing taxpayer, $450,000 for married filing jointly. Anything above that income goes from a 20% long-term capital gains rate to a 25% capital gains tax rate. Okay, now again, this is proposed. Nothing's been done yet. Okay. In addition to that, IRA rules, big changes proposed here. Number one, the backdoor Roth, where you could contribute money on a post-tax basis to a traditional IRA and then immediately convert it to a Roth. Looks like they're proposing that goes away. Also, self-dealing in a business interest in an IRA. If you're a 10% shareholder in a privately held company, where you could invest in a company through an IRA, a self-directed IRA, some proposed changes on that front. Lastly, estate taxes. All right, some major changes here. Number one, the estate tax exemption. As a couple is around $22 million. That number is going to be cut in half. If you're single, again, that number is going to be cut in half. Other potential changes there, grantor status may be going away. There may be some questions on that. Feel free to reach out to us there as well. Things that are not addressed in this tax bill are state and local taxes. Certainly, depending on what state you live in, there's a cap. If you have state income taxes right now of no more than $10,000 for state and local taxes, that affects states like California, New York, Illinois, where property taxes and state income taxes are pretty high. Other states like New Jersey, that's not addressed, as well as solving Social Security deficit. So to be determined. Again, a lot of potentials here. Nothing's been inked yet. If you have questions on this, want to discuss this further as it affects you or your situation, please feel free to reach out to us. We'd love to have a deeper conversation. Go to our website, message us through social media. Love to have a deeper conversation.